Welcome to Carter's Corner Pocket, where we fuel the rocket. Today, I'm talking GameStop, CNBC, Yahoo Finance, and the media's false narrative that they push out about Ryan Cohen and retail investors like you and I. You're either short GameStop or you're on somebody's payroll. Somebody made a call. Who is it? All right, guys, here we are. Today is Thursday, May 2nd, 2024, and GameStop is up 1.65%. As I always say, looking at the day-to-day, it doesn't matter. Let's take a look at the macro, where we are, and how we're doing in that giant falling wedge. Let's see. There's a big gap up here. I'm not sure if it was closed. For gaps, I like to look on the daily to be as precise, but I don't really play that game. But anyways, still in that wedge. We broke up, some consolidation. We'll probably break up again. But even if we go down, doesn't matter. I bought shares yesterday. I'm gonna buy some more shares today. You know how that goes. Okay, let's take a look. Let's go way back. Congressional hearing. Let's take a look at how Representative Al Lawson of Florida talks about retail investors and how he can prevent this again with baby Ken Griffin, Gabriel Plotkin.
Mr. Plotkin, do you believe that there is manipulation, distrust, and overall inequality within American finance? And what do you believe are the consequences of big guys like yourself, but also little guys in this process?
Well, thank you for the question. I really can't speculate, in terms of the broader system. I think, Melvin, my focus is on running our portfolio and building a great organization and a strong team. I think some of the issues you speak about are much greater societally, and it's not really my area of expertise.
Okay, well, one of the things you guys have Series 6, Series 7 license and everything, but these amateur investors don't have to go through those same standards. And because they do not have to go through those same standards, how are they able to go in and manipulate the market? Maybe someone there can answer over people who have been involved in this research and calculation and investing for so many years. Can anybody ask how they're able to go in and manipulate the market? They call billions of dollars to be lost.
Sure. Look, I think, as we've spoken about today.
Sorry, it was hard to hear that. I had to put my face to the screen. The representative just asked how retail investors were able to cause billions of dollars worth of losses. You're about to see Gabe Plotkin blame us for conspiring together, joining together, when we're really individual investors doing what's best for ourselves and making our own financial decisions.
The financial markets are changing. There's a lot of new players. I think they saw an opportunity, to drive the price of the stock higher. And today with social media and other means, there's the ability to kind of collectively do so. That was a risk factor that, up until recently we'd never seen. I think, sometimes with retail investors, you think about, and they've been really adept at this, investing in the internet or software stocks or electric vehicles and, ideas with big opportunities and they chase them because they believe in the fundamentals. I think this was very different in that a lot of the meme stocks, these were businesses with real challenges, but they exploited an opportunity, around short interest and the way that was approached. And I think, us at Melvin will adapt, and I think the whole industry will have to adapt.
Well, I understand that. And so I guess from my standpoint, and I don't have much more time, but what do you recommend to us to try to keep from letting this happen again?
Look, I think to some degree.
He just said we collectively got together to go against them. And then the representative is asking Gabe Plotkin what he recommends to prevent this from happening again. Why would you ask the guy that got you here in the first place how to fix this problem?
Degrees markets are self-correcting. I know moving forward, stocks, I don't think you're going to see stocks with the kind of short interest levels that we saw, prior to this year. I don't think investors like myself want to be susceptible to these type of dynamics. I think there'll be a lot closer monitoring of message boards. There'll be software providers. We have a data science team that'll be looking at that. Whatever regulation that you guys come up with, certainly, we'll abide by, and I look forward to, helping, if you guys want to have future conversations about that.
They're monitoring message boards. We know that, but they can't change what we do. Buy and hold. The lower class made money, and now Gabe Plotkin's going to help with regulation of it. You're going to regulate individual investors. You already did that by removing the buy button that we still haven't forgotten, and we will never forget. That's why we will always hold, continue to hold. GameStop, $45 pre-split. Bed Bath & Beyond, bankrupt. AMC, in pennies, 30 cents. There's only one true stock. Here, let's go along with the theme of fake friends from the last video. Here's Ryan Cohen on CNBC. You'll see how nice they are and how polite they are and how welcoming they are to him when he sold Chewy. That's when he wasn't a threat to them. And then I'm going to show you the difference of when he entered GameStop and the way they talk about him.
The world has changed. There's a lot of businesses back then that didn't make sense that make sense today.
We were seeing a lot different investments in the pet space back then, and even companies like Amazon that are now playing in this more so, Walmart. It seems that Chewy is doing something different than they're able to do. Even
remember this punk over here. Look at his face. You'll see him in the next video.
though both of you have kind of deep data on your customers, how does the data make a difference in what you're offering to a lot of these return customers?
I would say really it's about focus and doing the basic things really well. And so when you think about e-commerce today, it's really table stakes, to ship quickly, be competitively priced, have a wide selection. But since the beginning, I was using the neighborhood pet store as my inspiration, right? And so they were, delivering this amazing experience, and I trusted their advice, and they were the experts in the category. And so we've been able to do that at Chewy online and at scale. And it's the handwritten holiday cards and the pet portrait and the flowers and all of these things to really show our customers we care. We are pet owners.
You can replace Chewy with GameStop. People trust us. They come here because we are the experts in gaming with exceptional customer service every time you go to a GameStop store.
Owners, we care about them and we care about their pets. And I think this is a category where differentiation and being focused is really important.
You're only 33, so you have a lot more of your career ahead of you. And you talked about your beginnings, saying you were coming from a middle-class family, you didn't have a network, and VCs really didn't pick up the phone when you called. For other entrepreneurs who are maybe in that position now, what do you say to them?
Don't stop, just stay focused, continue executing. Don't take no for an answer. I could have stopped or changed my business plan after I got 20 or 30 no's. And, I found someone eventually who ultimately decided to invest in me. And, I am grateful for all of our investors. They've been so supportive all along. I'm grateful for all of the employees. There's just so much hard work and sacrifice and passion and dedication that made this possible. So I'm,
1 second, Grandma. This guy's gonna buy my car. Okay. You need Carvana. Entering plate number, no accidents, right? No.
I'm very lucky.
Another major segment of the market could be services as well. Would you like to see Chewy get into veterinary services, even partner closer with veterinary sciences that are out there?
I'm not going to comment. I think it's up to the management team to decide exactly, how they envision the growth of the company. I would say today where Chewy is, just within its core business, there's still a lot of runway, and it's a $70 billion TAM. There's so many different growth opportunities, whereas services or international. And so I think the company has a lot of optionality as it looks towards its future.
How are you and your pet celebrating tonight?
Tylee actually, unfortunately, didn't come with me. I wanted to bring her, but she's a 5-pound teacup poodle. She's 12 years old. And
so she's been with you since the beginning?
Yes, she has. She's 12, and she was the inspiration. She was the one who I was bringing to the neighborhood pet store every few weeks. So she's the best.
Absolutely. Well, it's a true inspirational story for you, for your pets as well. And congratulations on this milestone.
Thank you. I appreciate you guys having me.
Absolutely. Ryan Cohen, who is the founder and former CEO of Chewy, joining us here today on Chatter.
So kind, so welcoming, so endearing. And here's after Ryan Cohen bought shares of GameStop, was chairman of the board, and then announced becoming CEO. Let's take a look at the difference. Here's that guy over here.
Talk a little GameStop on the day. Taking a look at shares of GME. Shares are higher by about 2.4%. The company announced this morning that they are naming Ryan Cohen as chief executive officer. This comes 3 months after GameStop fired their last CEO. The billionaire bought a stake of GameStop in 2020 and joined the board a year later during the height of the meme stock phenomenon. What we should also note is that he will not be taking a salary in this role.
Oh, well, that's mighty nice of him.
Yes,
Wow.
that doesn't matter to you, I know.
No, it's ridiculous. Here's another executive that, by and large, people have strong feelings about Ryan Cohen, that he's failed at GameStop. And I think all signs pointed to him, Brad, taking this CEO role. He has really a board of his own hand-picked puppets, people that he used, he's hand-selected to join that board, that he worked with at Chewy, people that he feels comfortable with. They are unlikely to tell Ryan Cohen no. But by and large, zoom out of this situation, and you have Ryan Cohen, who has fundamentally failed at changing a company like GameStop. And why?
Fundamentally failed at changing a company like GameStop. Let's take a look. Looking over here when private equity was involved. Minus $673 million net income. 2019, minus $470 million. Next year, minus $215. Ryan Cohen gets involved at the end of the year. Minus 381, and look at it decrease to minus 313. And now, this year, what's that? I don't see a minus symbol. It's a profit of $6.7 million, a $320 million flip from the previous year. Tell me how that's not fundamentally sound. SG&A expenses, service general administrative expenses, reducing every single year since he's taken. Look at this. 2019, 1.9 billion. I mean, whatever. You get the point. Let's go.
Because there is no change in GameStop, Brad. This is a fundamentally challenged market. You have digital downloads, you name it. And I know there's a lot of really hardcore believers remaining out there on Reddit in the GameStop story and Ryan Cohen, but he has absolutely failed at fixing this company. All he's done is successfully laid off a lot of former Amazon workers.
The top trending ticker on Yahoo Finance this morning, GME, and of course, as it naturally is, especially on a move like this, this is going to be effective immediately, we should note. And then additionally here, you had a question, what the actual trajectory from a strategic perspective is from GameStop at this point in time. I mean, inventory is largely shifting to being delivered over the cloud. You've got a deal that's going to be done perhaps, and is expected to be done, if you were to look at shares of Activision Blizzard at this point, expected to be done between Microsoft and Activision Blizzard. That's going to just further consolidates the gaming landscape as well. So where does GameStop sit within that, where you've got so many people just going to the cloud to make purchases? It just makes them a t-shirt company or a t-shirt retailer at the end of the day, and maybe you can get a couple Funko dolls there.
Well, no, maybe Calvin McDonald over at Lululemon could take all those unsold mirror devices and just stick them into GameStop, Brad, and maybe we can liquidate them that way. There's thousands of GameStop stores. I know we're thinking in real time.
Yeah, exactly.
This is innovation right here.
Look at that punk. Smiles at Ryan Cohen's face and stabs him in the back when he's not there. There's no plan? What are you talking about?
The guy has no clue, not the first clue. They are Blockbuster. And absolutely, physical retail is going away. It's not going away tomorrow. It's going away when the PlayStation 5 and the Xbox Series X are done with their life cycles. It's got another 5 years, maybe 6 or 7. But they should be harvesting that cash and trying to figure out what they can do with it. Instead, he's not paying his bills. Take a look at their accounts payable. 50% of revenue in the quarter is accounts payable. They literally have 6 weeks outstanding of payables. If they keep that up, no one's going to advance them any more products. So they're going to accelerate their demise. I think it's really crazy.
Yeah, I guess not paying your bills is tougher when you need to be advanced product. Elon Musk doesn't have that problem at Twitter.
Not paying your bills? GameStop just being a t-shirt company with Funko Pop dolls? Everything's transferring to digital? They have no game plan, no strategy? Ryan Cohen is not going to give you the strategy so you don't get ahead of him. It's the art of war. 101, come on. That's why they're all mad, because they have no clue what Ryan Cohen's doing. He's doing everything fundamentally sound for the business while he's looking forward to grow the technology aspects of the company. Accounts payable. What is that? Accounts payable. The balance. Accounts payable. He's paying his bills. Look at it decrease this year from 531 to 324. I'm going to show you what they're doing. GameStop has their own brand, headsets, mouse, mechanical keyboards, solid state drives. Look at this. Green screens, replaceable keys, customize everything. Everything's transitioning to digital. Okay, let's go over here. You can buy digital content, digital games. With your pro membership, you can get 5% off. Where else do you get a discount on games? It doesn't happen. You don't do it. You can get a discount on your currency. GameStop is transitioning to with the digital world and the digital economy. Trust me. If you just go on the site, go on the app, look at the fluidity of the app, look at the operation. It's light years ahead of where it was when Ryan Cohen took over. He's building this thing from the ground up and building a stable foundation so that the higher this skyrise gets, it's stable. He can build upwards.
You know, we've been trying to inform. You certainly have been working to inform what you call the retail investor. I don't. Yeah, you
right,
call
the
these
regular
guys
the regular person,
right? The merry men, because they're different. This is a different cohort to a certain extent.
They're not being. They're very. Look, first of all, congratulations to them. We all wish people can make as much money, and we wish they were making it on Apple, or we wish they were making it on Microsoft. But they're making it on companies that the three of us know are actually not doing that well. I'm not saying that GameStop should ever been as low as where the short sellers were selling. It's just because obviously there was a very smart buyer. Ethan Cohn came in. Was it the fellow the guy that
Chewy.
the guy started Chewy. He bought a lot of stock at $8, and he's a bright guy. But it's at 338. Do you believe that if you were to poll every single member of the board of directors right now, right? Every single member, every single member would sell it, and their families would sell it, and their lawyers, and their doctors, and their dentists, and their PTs would all sell it. And that's what I don't like about this. Now, of course, that's inside information. I'm not condoning that.
Ryan Cohen owns over 35 million shares in GameStop. Larry Chang keeps buying GameStop. Alan Adel keeps buying GameStop. The top 3 members of the board of directors are buying GameStop. That's a flat out lie. That's 3 years ago, but he knows what's up, and we know who he works for. We know he's from the hedge fund world.
If there was anyone who was involved with GameStop in any sort of way, shape, or form, who would accept the stock that this company should be at 338? But the people are buying it because, Carl, you see this too. The system is broken right now for certain stocks that are heavily shorted stocks. And people are thinking somehow, well, this is a home run. Take the home run. Don't go for the grand slam. Take the home run. You've already won. You've won the game.
Yeah.
You're done.
Shepard Smith here. Thanks for watching CNBC.
Jim Cramer whining like a little, you know what? He wants you to sell. Take the home run. Sell your shares. Don't go for the grand slam. Why do you care? Why do you care about GameStop? Here's some more Cramer.
On yesterday's big rally, this SEC filing shows that Chairman Ryan Cohen had bought 100,000 additional shares, raising his stake in the video game retailer to almost 12%. Last night he tweets, "I put my money where my mouth is," Jim.
Good for him.
Yep.
I mean, I think that the memes, they're back. I mean, they took up AMC as if somehow that's related. I think what we've lacked, of course, is a plan. The numbers weren't that great for GameStop. We still don't understand what he intends to do. Once he lays that out, then I think we can make a judgment. Like Bed Bath & Beyond, by the way, is in that one. That one, there's some technology that's needed. I'm just trying to figure out whether we combine the two. Who knows? He's a man of great mystery. But he comes in just when I think that the apes are like kind of desperate. It's kind of like Jane Good, the Jane Goodall of the apes. Right? He's the Jane Goodall of the stock.
They need some cheering up. And
they did. They were down.
Yeah.
They were down. They're a cohort. They care about 2 stocks. I mean, like, why didn't they care about, like, say, like Amazon, Tesla? But they've got, I would love to see what he's got. I don't understand yet. Matt Furlong is the CEO. That conference call was one of the biggest jokes I've ever seen. No questions taken. What do they think of Warren Buffett? Warren Buffett doesn't take questions. Please invite Andrew Becky out there. I want a plan other than just buying stock. But, these guys, the apes just love that. They'll take it up. Bed Bath, they just want a plan. Yeah. Now, the letter to Bed Bath was actually pretty sophisticated. I know that they've been in contact with me since then.
We're not apes. It's not a meme stock. It's all degrading. It's all degrading words to make you look like a joke. Meme means imitation. So this is supposed to, when they reference GameStop as a meme stock, they're calling it an imitation stock. You see how angry he is that they don't have a plan, because obviously he's friends with private equity. You've seen him talk about Bed Bath & Beyond twice. Look at that Bed Bath & Beyond board of directors, who they're linked to, and where that company is now. Here we are. Delisted at zero. You don't even have a chart. You don't have a balance sheet. You got nothing. And that's who he's trying to spread investors to. Here's AMC, 30 cents. The stock is worth 30 cents now because they've done a reverse split. That's where he's trying to send investors away from GameStop to these stocks. While GameStop, staying strong, keeping his strength.
I welcome dialogue as always.
Well,
Dialogue, welcome.
Ownership disclosures are a lot easier to get on the tape than strategic initiatives, wouldn't you say?
Yeah, but I think that yes, I do think that he did fix the balance sheet on the backs of the apes. They issued a lot of stock. They needed the balance sheet to be perfect. They have a chance to do something. Bed Bath has a great balance sheet. Now, if they spun off Bye Bye Baby at Bed Bath, and if GameStop were to have some sort of strategy that involved being a crypto bank, which was my plan.
You've been calling for that for almost a year.
Well, he'll do it, and then he'll claim it himself, and he'll just take it and run with it.
Sure.
He doesn't care. That's my idea.
But, I mean, is there urgency on any of these things?
No, because the balance sheets are good.
Right, exactly.
Balance sheets are good.
So they have the time to string this out.
Yes, they do. They can go on forever and have a lot of fun. It does seem like they're having fun. I mean, like he buys 100,000 shares is nothing for the man. But there's a lot of chaos in the marketplace. And there's a couple of forces. I mean, GameStop is a nothing company, a $10 billion nothing company that has gotten. I've tried to get the apes to focus on other stocks besides GameStop and AMC.
Who else would you include? What other names could they potentially?
I got 500. Yes, me.
He literally just said he's tried to get you to focus, while calling you an ape, to focus on other stocks.
I mean, if they just looked at any other stock, I mean, if they looked at, I don't know, Brunswick, and Sherwin-Williams, I mean, Fortune Brands. I mean, the fact is that they're stuck on these two stocks. They don't even look at Chewy anymore. They could do General Mills good quarter.
Yeah.
But I'm stunned that they just can't get beyond those two. Now, look, it's true, obviously, that I want to be sure when I mentioned that on NVIDIA that was rendered, it was Toy Jensen that was rendered. You've got to see Toy Jensen that was rendered. And yes, Adam Aaron should call us and then say you can't come on again, because that was brilliant.
That's so pathetic. You can clearly see where he's who he's afraid of, and what his narrative is, and what his masters told him to say. He's associated with them. He said in that interview that he called up the board of Bed Bath & Beyond. He called up private equity. He called up private equity. And look at what he's pushing out over here. Here we go. Let's see.
On what has turned into the soap opera and saga of the markets right now, and that is the story of GameStop. The news to bring you right now is that Melvin Capital Management, this is the hedge fund that had shorted this company that had effectively been attacked by an army of investors trying to push up and press up the stock of GameStop along the way. Melvin Capital is now out of the stock. They got out of the stock, from what I understand, yesterday afternoon. I just got off the telephone with Gabe Plotkin, who runs that firm. They've taken a rather huge loss. I do not have the full number on what that loss looked like. As was reported yesterday, both Citadel and Point72 have infused something on the order of close to $3 billion into Melvin Capital to try to shore up its finances. And Gabe Plotkin telling me just moments ago that the speculation that the firm would file for bankruptcy is false. There's some reporting taking place on Reddit, where so much of this discussion began and really created the momentum for, as I said, an army of investors using options to try to press up that price. To some degree, they might be able to argue now that they succeeded. If this was really about vanquishing, if you will, Wall Street, or vanquishing a hedge fund manager, in this case, they did take a loss. They may not put them out of business, but boy, did they come close. We've been following this story, which has been such a wild one. GameStop shares right now, I mean, I don't even know what to say. It's up 131%, $342 on any kind of fundamental basis. If the stock were worth more than $20 or $30, I think it would be something to behold. Real questions, of course, about stock manipulation, about the power of what's taking place on places like Reddit, really what's motivating this type of trading behavior at all. It clearly has nothing to do with the fundamentals of GameStop itself anymore, and much more to do with sort of pop psychology of who's going to be left holding the bag. The thing that concerns me most at this point is whether some of these investors will actually start to get out today. They'll look at this and say, we won the game if that's winning. Unclear where the finish line is in that regard. But as much pain as they may have created for Melvin Capital, for example, my great anxiety at this point is the number of retail investors that have been jumping into this literally in the last 24 hours who very well may get hurt far more and lose far more than some of the hedge funds that were involved in this. Let's just show you where we are right now. Joe mentioned at the top of the program, Elon Musk tweeting yesterday, which also powered the stock even higher. I mean, there's nothing normal about what you're seeing when it comes to this stock right now. Stock up 51% on Friday, 18% on Monday, 92% yesterday. As I said, soaring in the pre-market. Let's just give you a little bit of a rundown to explain what's happened. Shares popping early in the session. This was yesterday when Chamath Palihapitiya, also somebody who's taken to Twitter and whatnot, really trying to push up this stock. And again, it really raises some important questions about what these people are doing, why they're doing it. I don't like to think of the market as a game, but that's really what this has become, this stock in particular, a game. He tweeted that he bought February $115 calls on GameStop. The night before, he tweeted, tell me what to buy tomorrow, and if you convince me, I'll throw a few hundred Ks at it to start. Shortly after noon, then you had Cameron Winklevoss tweeting, thinking about going long GameStop. And then after the close, Elon Musk jumping into the action, tweeting GameStonk, which is a reference to the popular meme and linking to the Wall Street Bets Reddit page that's been hyping all of this throughout. That Musk tweet helping drive this pre-market move right now. Later this hour, we're going to talk to Robert Frank, who's been reporting on the biggest winners, and really, frankly, we'll see the losers of this GameStop trade. But a lot to be concerned about when you think about what's happening here. Where are the regulators? And is this just the beginning?
Shepard Smith here. Thanks for watching CNBC on YouTube.
Where are the regulators? I like this comment. Wait, poor people are making money? OMG, where are the regulators? Won't someone think of the hedge fund billionaires? Where are the regulators when y'all manipulate and lie? Nowhere to be seen. You can see the way they're desperate, trying to frame retail investors as not knowing what they're doing. They don't know our plan. They didn't know our plan was to buy and hold 3 years ago. They didn't know we'd buy on rips and dips. Constantly buying and holding because they're desperate. You can see it. This is a business, HEC business school, analytical paper done in Paris. It's a chart. Let's read it real quick. It says figure 11 shows how accounts known to have large short positions had a significant buy volume starting from January 22nd and how it remained high for the week. Traders with large short positions are identified. Sorry, I was making sure my mic was on, are identified thanks to their firm designated IDs associated with significant negative inventories, which is protected information. It is possible to conclude that these accounts were indeed trying to cover their short positions, which brought up the price. However, notice that the buy volume of short seller in orange, despite being visible, remains only a small fraction of the overall buy volume. Take a look. This is GameStop's volume, and this orange is the short seller volume. Shorts never close. They're rolling out these bad positions that they got themselves into to a later and later date. One day, the pipe's going to burst. GameStop's going to pop. They have everyone on their side. People with the bank term funding program is giving them money for their other strong assets to put up as collateral for their horrible bets like GameStop. Brian L. Roberts owns Comcast Corporation, who owns CNBC. Look at all of the assets that Comcast Holdings owns. Xfinity, your internet, your cable, entertainment. Look at this. Oxygen, Oprah's network, Universal Kids, Telemundo. They're international. They're everywhere. They control everything. Sports, things your children watch, markets. Look at DreamWorks over here. Sky Group International. Here's Brian Roberts talking about a bid for Storer Cable And guess who he's bidding against? KKR, private equity, Henry Kravitz. So based on that, Comcast begins to make a bid for Storer to top KKR. Ends up KKR won that bid, even though they offered less because it's private equity. But that just lets you know the circle that this guy runs in. You can't compete if you're not in the circle. It's an elite group of friends. Not even friends, it's an elite group. And you gotta be part of the club to play. He's definitely part of the club. That's how we got into this bidding war. And now let's take a look at this. Who owns Yahoo Network? Apollo, private equity. Shout out to Marantz Rents. Peace.